Hey guys, can you hear me now? I think everything should be alright now. If not, let me know. My mic was plugged into a wrong USB port. So let me know if you can hear my voice and see my screen. Alright, great. So thanks for hopping on, everybody. I'm just gonna go over the disclaimer just real fast. Trading involves risk. Please be small, be humble, focus on the long term, and do not risk money you cannot afford to lose. I'm just gonna skip all the rest. We're just gonna go straight into it. So let's share the screen. How is everybody doing? Let me know how you're doing. So yeah, first of all, I think the most important thing here is, of course, it's Monday, so we need to do our research about what is on the economic calendar today. Monday was today. That's almost over now. There was not much news today. A little bit USD news, but nothing major. So we can skip this. Tomorrow is going to be more interesting. We have the BOJ monetary policy meeting minutes. So that's not the actual monetary policy meeting, but it's the minutes. It's like a detailed description about what is said during that BOJ or BOJ meeting. Okay, the Bank of Japan monetary policy meeting. So that's very important. Of course, the meeting itself is more important than the minutes, right? But the minutes can give you more detailed insights about what is said, and so it can also give a little bit more volatility to the market, to the Japanese yen in particular now. Of course, we know the BOJ, so the Japanese yen, is less impacted by news, less impacted by their monetary policy meeting because it's almost never changes, okay? But we know that the Japanese yen is mainly driven by sentiment, okay? So we need to consider sentiment if you're trading the Japanese yen, but don't worry too much about these 2 data points right over here. I'm fine as well. Thank you for asking, Christoph. So let's see. So tomorrow we have the Red Book, we have housing prices index, we have consumer confidence. That's pretty important. We have new home sales, which is also important, right? If you know that new home sales at least is increasing, that tells us a lot. It tells us that the economy is doing well. People are willing to spend. People are willing to buy new houses, and if you're buying a new house, that means that you got confidence in the economy, confidence in how everything will evolve, confidence in your job, because if you don't know if you're gonna keep your job or if businesses are firing people, you're probably not gonna buy a new house. So this is a very important indicator to watch how the economy is doing. Also, when they build new houses, this is new home sales, but if they're building new houses, that means that they will need to buy more commodities, and commodity prices will go up as well. Okay, they need stones, they need wood, they need glass, they need sand, they need almost all commodities, right, to buy a house. So that's important as well. But other than that, we don't have a lot of USD news, especially for you guys who are using the EA, the automated trading system. Tomorrow will be okay to trade, of course. Try to turn your EA off around just before New York session, okay? But it should be a very quiet session, which we like when trading with the EA. Then on Wednesday, everything will be happening on Wednesday, of course, and that's why the market will also be very, very slow today and tomorrow, and also on Wednesday before New York session. Everything will be pretty slow because all investors, all traders are waiting for this, right? The Fed interest rate decision. This is the most important interest rate decision of the world, okay? It's from the Fed, it's from the Central Bank of the United States. They usually lead all other central banks. We're gonna talk about that in a second in this document right over here. But everything is just gonna lead up to this. Okay, so that's gonna be the most important thing: the Fed monetary policy statement, the interest rate decision, and of course, then after the interest rate decision, the Fed or the FOMC press conference. So these three are the main events, and they will give a lot of volatility, although it's expected that it will give a little bit less volatility than usual because the market is already quite positioned, and less surprises are expected both to the upside or to the downside for the United States dollar. Then on Thursday, we also have AUD consumer price index, which is also pretty important, especially if you're trading AUD. And also this can impact gold a little bit because we know AUD is one of the biggest exporters of gold as well. So be careful when you're trading gold and this news comes out, okay? So try to start your EA. If you're trading with the EA, try to start behind or after this news around 4 o'clock Belgian time in the morning. Because otherwise you might get spiked out or get a lot of drawdown just because of that news when you're trading gold. Other than that, Thursday should be pretty safe to trade. Yeah, especially or at least until the New York session. Then we are having again a lot of USD news, GDP news. This is basically the indicator of growth. How is growth doing in the United States? I think it's expected to fall a little bit, but that's normal when they raise interest rates. Okay. Again, how does interest rates how does that work? The inflation is super high. They need to bring down inflation, so they rise interest rates. Okay. If interest rates go up, then growth goes down, but inflation goes down as well. So, but there is more than room enough in terms of growth. So there's nothing to worry about, at least for the United States. There isn't much to worry about. Initial jobless claims, very important. PCE, also very important. So this will also be a lot of volatility in the United States, or at least for the USD. So be careful on Thursday in New York session as well. And then on Friday, probably Fridays are a little bit less volatile or a little less packed with news. We do have again CPE, or PCE, excuse me. Employment cost, that's not important. CFTC, all right. So basically Friday will be quite not that busy, but we know Fridays are acting sometimes a little bit more volatile just because increased retail volume. So let's hop on to this document from ING, of course, which we read every day. FX Daily expect fewer fireworks this week. Oh, also guys, if you're watching the recording, I don't know why, because sometimes when I'm doing these live streams, there is no delay between voice and screen, or voice and my screen. But when I'm recording, when I'm uploading this, the voice or the sound and the screen, the visuals are not in sync anymore. So the more you go to the end of the session, the more delay there is between sound and visuals, sound and screen, right? So I'm trying to fix this. If you have an answer to this, or if you have something for me to help me with this problem, just let me know. Also, don't forget to subscribe and like the stream. It helps me out a lot. Okay, so here for the Fed, so the FX Daily, what are they saying here? Expect fewer fireworks this week, so that's good. We don't like fireworks or too much firework, especially trading with the EA. When you're manual trading, you do like to have a little bit more volatility, more volume, more fireworks, as they say here, because then you get bigger moves. But when you're trading with the EA, we like consolidations, right? We don't think the Fed week will be as stimulus as the ECB, as the scope for surprises in Washington appears much lower, and markets have made strong conviction call on the 75 basis point hike. Euro USD should now become more sensitive to Eurozone data releases, and this week's CPI figures will be watched closely. Parity looks more likely than a big rally from here. So parity basically means Euro USD going below 1. So again, if you're trading the euro, again, what they are saying here as well, Eurozone data releases will be more sensitive. Okay, they will have more influence now that everything is behind us with the ECB meeting and the interest rate decision. So now again, that data will have more impact. So high conviction of 75 basis points by the Fed. We've entered Fed week with markets likely having a more solid conviction call on the magnitude of the rate increase. After having quite briefly flirted with the idea of 100 basis points, investors have centered their expectations around 75 basis points move on Wednesday. And if we take a look at the Fed Market Watch, we know right now we are in the current rate of 150 between 150 and 175. So it's widely expected that we're going to go to 225 to 250. So that's probably the range. 75% of all market investors are expected to go to this. This basically is a 75 basis point increase. But 25% is expecting a 100 basis point increase or a 1% increase. If we do get that, expect the dollar to go much, much higher because only 25% is priced in. So again, if we get a 75 basis point increase, probably the dollar is just gonna consolidate and stabilize. I don't think the dollar will fall much, much further, but I don't think it's gonna go much, much higher on a 75 basis point increase either. Okay, so I hope that makes sense. Also, guys, I'm a little bit sick, so bear with me. Compared to last week's ECB meeting, there appears to be more limited scope for a surprise in each direction. So no surprise. Expect market volatility to be less impacted this week. We think that the Fed message could put a floor under the dollar into September, which is good, as the notion that the Fed is still in the front-loading phase of tightening could prevent markets from offloading their long positions. Incidentally, other major central banks, ECB and the Bank of England in particular, expect or appear more exposed to dovish repricing risks. So we talked about that. No, Paco, I don't have corona. I just did a COVID test. I'm all right, but I think it's just the flu or something like that. So yeah, we talked about this, right? Especially about the Bank of England. They are hiking interest rates. Interest rates are increasing, but I think they are putting too much. They're just doing too much, and I think their economy will not be able to handle it. So they will need to reprice, and that's going to be a dovish repricing, which is which holds a lot of downside risk for the pound. And now we also have the same situation for the ECB. So ECB, or at least euro and the pound, are not looking that strong. Looking at other FX drivers this week, recession fears should continue to prevent a solid recovery in sentiment. We know a recovery in sentiment, or risk on, in other words, makes equities go up and makes high beta currencies go up, like AUD CAD and NZD. So probably they won't see a lot of upsides in the next few weeks, which should incidentally give some extra support to safe havens, including the USD, JPY and CHF as well, and may keep the path uneven for high beta commodity currencies. We expect the dollar to keep hovering around 107 level into the FOMC meeting and possibly retest the 108 level after Wednesday. We can take a look at the charts and see where the dollar is right now. We can see at 106,500. We went as low as 106, probably something like that. Yeah, just spike almost to 106. Personally, I don't think we're gonna go much lower. We are in a buy zone, but we can't take a look at it like a buy zone because it's stepping lower. But that's something else right now. Let's see. Yeah, the market will be very, very slow. We might go to 105,500, maybe with a spike of volatility during that FOMC meeting, maybe during the press conference, and then going back up. But I personally think it will stay in a range like this for the next 2 months or so. At least that's what I'm expecting. Something like that. That will be the range, in my opinion. At least if we're looking at fundamentals and the economic situation and the business cycle where we are at right now. And then for the euro, with this in mind, we'll need to scan the Eurozone's calendar with much more scrutiny from now till September. So again, European data like CPI, employment, and growth numbers will be a little bit more sensitive to the euro. We continue to highlight how the current pricing on the ECB tightening appears to be overly hawkish when factoring in economic gloom, and this implies, in our view, that there is an asymmetrical balance of risk for Euro USD in the near term when it comes to reacting to incoming data, as the chances of euro negative dovish repricing are considerably higher. Okay, so that's not good news for the euro. And then here for the pound, it's going to be a very quiet week for the UK calendar, as the Bank of England in quiet period ahead of the next week's policy meeting, and there's no market moving data releases. So maybe if you're using the EA, maybe you could try to figure something out for the pound, because again, a very quiet week, a very slow week is a pretty good environment for the EA to make a lot of profits. Of course, we are here to trade manually and find some setups. Just very briefly about oil, or basically commodities in general. The oil market has seen some upside, I believe. Let's see how oil is doing. Yeah, it's just been consolidating basically, to be fair. But we are seeing some strength in ICE, which is oil, ICE Brent. The market is still tight and expected to remain so for the foreseeable future, largely driven by expectations that Russian oil supply will edge lower. Again, low supply means higher prices. More supply is lower prices, but of course you also have demand. The demand side of the medal is also very important. As if there is not enough disruptions to the energy market, Europe is now having to worry about low water levels along the River Rhine, which is also an important trade route for the continent. The low water levels restrict barge movement, and we are seeing this to have an impact already. So basically, the big tankers with oil are having troubles to move in low water levels. Okay, so that's important as well to know. Again, that means there's probably going to be less supply, or just slower supply import. So that's that. Let's check out the let's check out the charts. If you guys have any pairs that you want me to go over, just let me know and I'll have a check for you. Other than that, we had AUD CAT drawn out. That was probably on the 1 hour time frame. We were somewhere over here. Yeah. So that was a pretty safe setup. So I think it was the Duvel who told me, hey, this price is already moving. I told you guys, maybe wait for a retest on that pivot. It happened. It even went a little bit lower. Our stop loss should have been here. Okay, if you buy on the pivot, your stop loss is just below the M2 level, just below the green box. It didn't hit our stop loss, and then it moved up until our target perfectly. Okay, so that's a good trade. It didn't move like I expected it to move. It took a long time, but eventually it hit our TP how it should reach it. Let me remove everything. Although this is not a pretty chart, we can see that price is creating higher highs, higher lows. This was a very nice buying opportunity. We had a nice level of structure that got broken right over here. So we had structure here, structure here, structure here, got broken by a decent move, a retracement into that buy zone, into that pivot level. So that was a first confirmation after our first confirmation of breaking that structure. We had a 50 EMA acting as support. After also we had that 21 EMA crossing that 50 EMA to the upside, showing us that the market is technically bullish. So this was a very nice buying opportunity. This was our target zone. It didn't fully reach our target. So that's something else to deal with, but it should be break even. Maybe you got taken out break even. That's also a possibility. But anyway, it was not a loss. So let's see if we can find anything else. Not on this chart for me at least. 4 hour time frame is also it already reached that target zone, so I'm gonna stay away from that one. I'm gonna demarket AUD CHF. Same thing, not really that pretty. And at the same time, we need to think about sentiment, what they said about sentiment as well. Sentiment probably has seen its best side for now. That recovery that we've seen in equities, in basically high beta currencies, commodity currencies like AUD, like CAT, like NZD, we've probably seen the biggest upside so far, and I think it will be very limited. So we need to start thinking about maybe more of a risk-off approach, which basically shows us, or which it tells us in theory, that AUD CHF should go down. We are still at resistance here. Basically, this was support that now turns into resistance right over here, and we still haven't broken that resistance zone. So that's an important level to watch. Of course, I'm not gonna sell here. I'm not seeing bearish divergence here either on the 4 hour time frame. On the 1 hour time frame, let me see. I'm not seeing any bearish divergence either, so I'm not just gonna blindly sell this. We are in the target zone, so probably we're not gonna go much higher. If we go much higher, then that's telling us that sentiment hasn't shifted to risk off, and we are still in a risk on environment. We also have a bullish cross here, so a pullback to this level could still be possible, or possible buy setup to go higher. So I'm not entering this trade. I'm not going to analyze it further because it has too much different angles that you can watch it. This is something else, AUD JPY. I'm more bearish on this one. We saw a very strong impulsive move to the downside. We had our bearish cross right over here, and basically this is support, right? Support now is turning into resistance, so this is looking very good. We are seeing some bearish divergence. We are seeing the RSI in overbought area, in overbought conditions, and already turning to the downside. So as you might know or might not know, it doesn't mean anything if the RSI is at 80 or maybe at 90 or maybe at 100, right? It doesn't tell us anything. It only tells us something if it goes back down. And right now it is going back down, and it probably, if we're going to look at the 15-minute time frame, which is the time frame we like to enter our trades on, we can see that already right over here, already this was bearish divergence. So if you can follow with me, let's see, here we have this type of high, right? And we went higher, higher, higher until this high. Here we have the same thing, but it's basically the opposite. Okay, so we can see that this high is not going higher. So basically they are two equal highs, and that's telling us that the buying pressure is decreasing, and we might see a turn to the downside. And that's exactly where we want to see that type of action. We want to see a rollover right around this roll reversal, right around this red zone. So yeah, that's looking very good. We then had an impulse, so this is looking very good. Also going to the downside, so we might be in for a nice trade right over here. The only thing that's a little bit concerning is that we are around that R1 level, so we cannot go any higher. If we go higher, probably we'll go much higher. So we cannot go higher than this, which also at the same time gives us a very nice risk reward. Okay, our risk reward will probably, let's see, I'm just gonna remove this zone just to see my R1 level very clearly. Right, here is my R1 level, so I'm gonna put my short position right on that R1 level, which is where we are right now, approximately. I'm gonna put my stop loss just above that high right over here, because we cannot go any higher. So if we then take profit and go to the conservative target on the daily time frame or on the daily pivot, that's already a 1-to-8 risk reward, almost a 1-to-9 risk reward, which is a very nice risk reward, especially with all the confirmations that we have so far. So it's worth the risk. Would I risk 1% on that trade? Probably not. Would I risk 0.5% on that trade? Probably yes. You can also go to the 5-minute time frame and see, maybe you can wait for a little bit more confirmation with the same risk reward. And basically what you should see is some kind of a break. So you have a zone like this, which is now a bullish zone, which is a blue zone, but I'm gonna make it neutral. I'm gonna make it yellow because it's a zone I want price to break. So basically we can trap price between these two zones, and we want price to go down, break this zone, this lower zone, and then retrace to that zone, retest that zone. Okay, so we don't want a break with small candles. We want a strong break, a strong candle, a candle like this. We want a candle like this to break this zone. Okay, and then we want slow correction, a slow type of price action, retesting this zone, maybe creating a double top or anything like that. This sell zone should be down here. This 50 EMA should turn to the downside, like, whoops, not like that, like this. Okay, and our 21 EMA should cross it like this. So that one should be orange. Okay, so this is basically what we want to see. And then when we see this, we want to take price lower. We use the same target as I showed you just before, but we have a more solid, a more safer trade. So you might say, oh, but I'm losing this move. Yeah, but you have much more confidence, much more conviction that the trade is definitely gonna go your way. So hypothetically, the trade would look like something like this. And we will have the same TP like that probably, or like this, depending on where the trade, when the trade starts. But this is again 1-to-8, 1-to-9 risk reward. On the 5-minute time frame, you can have trades like that when you're using your bigger time frame target zone. So that's a very nice trade. AUD NZD, not going to trade it. AUD USD, we had that trade last week, Wednesday. We were right over here during the session. I told you guys we're possibly going to have a retracement to the pivot. That happened, but we didn't quite touch that pivot. One day later we did. I'm going to just move this aside. One day later we did reach that pivot. So if you had still your buy limit waiting here, that one got activated. Your stop loss didn't got touched, and basically you just went up. It took again a little bit longer than normal, but we did reach our target zone, which was right over here. So yeah, pretty nice trade. 1 to 4.5 risk reward, not that bad. Gonna delete everything and see if we can find something new here. But again, it's USD, it's the Federal Reserve week. It's gonna be a very dangerous week to trade USD in general, just because of the FOMC meeting. So I'm just gonna skip this pair for now, but we can take a look at the bigger time frame just real quick. Again, AUD will probably weaken, USD will probably strengthen or keep the same strength for now. But again, this is too dangerous. If I would do anything, I would probably sell it based on fundamentals, but this is just not the time. Then Bitcoin. Bitcoin is moving very similar as equities, the equity market, and we can see that still we are going down. Okay, we can see that we are in a sell zone based on the monthly pivot, the daily time frame. So this is probably going to be a big move if this move happens, which I do believe it can happen. We are around 22k. The next target is going to be let's say 10k. It's not going to go lower. My ultimate target when it was at 55k, my ultimate target was 11k. So if it's around 11k, I'm going to probably start buying Bitcoins again. But for now, it's just trending down, trending to the downside. Impulse, correction to the pivot, drop, target zone, correction into that pivot, touching that 50 EMA, exactly what we need to see to move lower. Fundamentals are in line as well. So selling Bitcoin is probably not the worst idea. But again, on the longer term, I'm definitely a bull for the next few years. But in the short term, this month, probably Bitcoin is going to go lower. Is it going to reach 8K, 9K, 10K, 11K? I don't know, but it's very possible. But again, I'm not trading Bitcoin like that, but just to give you guys my insight, my view on Bitcoin. Now you have it. CAD CHF probably going to go lower as well. So again, this is looking very nice on the daily time frame. We had a double top over here. We had a low, which was broken by this strong move. And then we had a pullback into a sell zone. After that, we had this bearish cross, that 21 EMA crossing that 50 EMA to the downside, telling us that the market is turning bearish technically. So that's what we need to see. We had some kind of transition period, a sort of consolidation in that sell zone, which is normal because it's a monthly pivot. It takes a little bit more time to go down, but that's what we are expecting. Okay, we are expecting a new down move. Let's go to a 4-hour time frame, see if we can find something right over here. Yeah, we are seeing something, right? We are seeing this was consolidation. That consolidation broke with a strong move. That's what we need to see. Now we have a very short, a very aggressive retracement. But if it's not going any higher, this is R1. By the way, if we're not breaking R1, that's good news, and we can expect this to go lower for the rest of the week, which is interesting. We probably had some imbalance right over here that got filled as well. So I expect this maybe to consolidate a little bit, and by the time we have maybe Wednesday, Thursday, which will already be here, I do expect this to go lower. Again, same approach as AUD CHF. It's a high beta currency against a safe haven. If sentiment is not improving, if sentiment is basically going more pessimistic, then CAD CHF will probably fall. But we need to take into account the oil market as well, because the Canadian dollar is primarily driven by the export of oil. Client help desk in FXVM is quicker than Discord. I suppose it's fixed. Oh yeah, I'm happy for you, Alexander. Yeah, I'm still waiting on my account from Discord. I literally never get an answer from these guys on that email address about that fact. So I really hope I get my account back sooner than later, because it's really working on my nerves. If it's not getting fixed by tomorrow evening, I'm just gonna create a new Discord, guys, and I'm just gonna invite you all, because yeah, I just cannot work that way. So yeah, we analyzed the dollar. We're gonna check AUD, Euro AUD. What did we had on this one? Yeah, we never got that. I'm just gonna remove it now. It's edging lower, but I don't like that type of price action. I'm gonna stay away from it. But again, we had a clean break of this support. We had support right over here. Okay. We had support that got broken, retested in the sell zone, 50 EMA pretty close, and now probably gonna drop lower or consolidate. And I expect it to consolidate, because I don't think AUD will be strong enough to take this lower. Or Euro should be very, very weak. That's a possibility as well, but I'm not gonna risk my money based on one view. Euro CAD, not gonna touch it. Basically, I'm gonna demark these. Euro CHF, let's see. It looks like we broke this again, this support. We had a double bottom here as well. So basically, this is also very hard to trade, very difficult to trade. Should be a good environment to use the EA on. Just telling you guys. Yes, I know we are in a sell zone. We are in a downtrend. But this low not getting broken by this move is an alarm bell ringing and telling us that Euro is not weak enough to go lower just yet. Okay. Euro JPY, let's see. Very, 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 very difficult to trade as well. I don't like difficult. I like to see a very clear chart. When I open my chart, I immediately need to see, oh, this is going up or this is going down, and this is just consolidating. If you would ask me blindly to buy or sell, I'd probably sell this, because I expect Euro to go down, right, based on negative economic situations. And JPY is a safe haven, which is probably gonna rise in the next few months. But again, that's not enough for me to do anything. Let's see what else do we have. Euro NZD, same situation, very consolidative, very ugly to trade. So I'm gonna skip this. Euro USD could be more interesting. That was a trade from last week. Hit our stop loss and then hit or went probably 1 to 2 risk to reward. Yeah, 1 to 2 risk reward into profit. That was a loss, unfortunately. And now it's just consolidating, but look where it is consolidating. It's right now it's consolidating in a sell zone. I know the sell zone is higher, so let's take a look on the bigger time frame, which can give us a better view. That's not the ideal situation. Okay, so yes, it is trending very nicely. So if we are removing the pivots, it is doing what we want it to do. It is going down. It made a retracement. Looks very good to sell. It's riding that 21 EMA for now, which is very aggressive. I don't think we are that aggressive right now. The market has been selling off already for a very long time. So I don't think we should enter on an aggressive way or an aggressive method. So what I would do is just wait until this support gets retested. This excuse me, yeah, it was support here. It's gonna be resistance if we get there again. So let's make it red. So I do want price to go all the way up here, which is 103, which is okay. I expect this to go to 103, where we have that 50 EMA acting as resistance as well. Hey Nick, yeah, nice man, nice. I hope you enjoy the stream, and I hope you learned something from it. So if we apply those pivots again, we can see that next month's pivot is lining up with that same level where we can expect that 50 EMA to be if we consolidate a little bit longer, if we consolidate a little bit further. This would be the price where we will try to sell. Okay, we reached our target, we even went a little bit deeper, a little bit further, and now we expect a retracement into that sell zone to then make that next sell, and then we will be below parity. Below 1 is below parity. For now, that has been acting as support. It can probably act as support, temporary support, when we reach this price again, but when we drop lower, expect it to go much lower. Okay, so I'm not touching this right now. Maybe on a 1 hour time frame we can try to look to buy this, but again, against the dollar, buying anything against the dollar right now is just not a smart move, so we're not going to do that. I do want to keep an eye on it, especially on the bigger time frame. And then the pound pairs are going to be very slow this week. Against AUD, I'm not going to do it. Against CAD, I'm not going to do that either. Especially I'm expecting the pound to get a little bit weaker, so that would be a better thing to sell against safe haven like CHF, JPY or USD. So let's see where we are against CHF. So it's still in that big consolidation zone, so I'm gonna move this zone so you guys can see this is just one big consolidation, and it will keep being a consolidation until it breaks. So this was not a break. This is just testing it out, putting its feet, its toes into the water. It was too cold, the water, so it went back up. Okay, so we need a break. Again, I think I moved this already a few times, and I'm gonna move it again together with this. So basically what we need to see, oh damn. We need to see a break like that, a retracement, retesting this strong support, and basically that's where we want to try to sell it in a sell zone. So until now, or until this break happens, we're not going to touch it. So for now, we're not going to touch it, but we know what to do when it breaks. I enjoy the vids, just having some trouble concentrating with the background. Oh yeah, background music, not gonna lie. Oh yeah, sorry about that, man. The videos were created a long time ago. If I would do it again, I wouldn't use the background music. But I'm happy to read the feedback, so thanks for that, man. Against JPY, let's see. So here we did got that break, so that's interesting. Last week we were talking about being in consolidation like this, and finally it broke. So we have this scenario happening right now. Whoops. So I'm gonna remove these arrows because that didn't happen. What did happen was the break lower, and now we are at that retest. This arrow is now happening. Okay, so we are getting that retest. We are in the sell zone. Of course, the sell zone is not much lower, so we need to be careful. We need to act with caution. There is also a little bit imbalance still in this candle, so it can still go a little bit higher, but it is looking pretty strong, pretty good to go down. Let's see. Yeah, that's looking pretty okay. Let's see on a 30-minute time frame, 15-minute time frame. We are seeing bearish divergence right over here, so we can see this is a high, right? This is a high, so this is going higher, and here it's not happening, which is telling us that basically the buying pressure is decreasing, so there are less buyers. It doesn't mean that sellers are entering, but for that we need to take a look on the 5-minute time frame, and we need to see some kind of a break of structure, which is not really happening for now. So be patient with this one, let it make another move to the downside, and then sell the impulse, the rally to the upside, sell that one to take it lower. So be very cautious, very patient with that trade. Gbp USD will probably be very similar. We are seeing bearish divergence right over here. That's good. How's the daily time frame? We still have room to go lower. I think that will probably happen, but of course the market will wait until that FOMC meeting. So that it's good that we have a new session around Wednesday, because on Wednesday we're gonna have, I think, so on 6 p.m. we have our meeting or live stream, and on 8 p.m. 8 p.m. we have that interest rate decision, so we can really prepare for that interest rate decision and see how the market is trading up until that moment, and then you'll probably see that it will be going very, very slow, small candles, just consolidative. And then once that FOMC meeting comes out, that interest rate decision is made, you will see very, very big candles with large spikes. So then you need to be out of the market. But then we can make our plan. Once that interest rate decision has been made, we can make our plan for the next few weeks, how the dollar will trade and how sentiment will be impacted by that decision, because it's a very, very big decision for the forex market. So let's wait with GBP USD for now until Wednesday evening. The same is happening basically for all pairs, to be honest, because everything is very reactive to the Fed interest rate decision. But we can take a look at the German 30, which is again at a sell zone, reacted very strongly from that monthly pivot itself. 50 EMA here as well. Let's see on a 4-hour time frame what we had over here. Let's see. So we broke structure to the upside. This was a very clean break of this high. We retested it, but there was no buy zone. There was nothing here, basically, to be honest. And now what we can expect, purely based on technicals, we can expect this to make another high, because this is an impulse, a correction, buy, impulse, correction, buy. We are at the pivot. So this is a good area to buy from. Of course, if we're looking at the daily time frame, it's not lining up. So be very careful. I would advise not to buy this, especially with sentiment probably gonna take a hit to the downside, risk off, in other words. So be very careful. Also, the bigger time frame always rules because of the economy. What is this question based on, Nick? Are you talking about German 30? Just let me know. Be clear in the questions. So that trade, I wouldn't do that personally, especially looking at the bigger time frame, the daily time frame. Very careful. This could go lower. The next pivot or of next month is lower already. If we open around M3, you know what that means. Opening at M3 in the beginning of the session, doesn't matter if it's a monthly pivot, a weekly pivot, or a daily pivot. If we open in a downtrend at M3, that's probably going to be the high of the month, and there will only be downside. In the other way around, if we are in an uptrend and we open like we have over here, we open in an uptrend at the M2 level, which is the bottom of the buy zone, this is probably going to be the low of the month, and we only will see upside. So be careful with that. This is screaming that it's probably going to go lower. Does that mean that it can't go a little bit higher into that sell zone? No, that's very possible. Maybe that's going to happen tomorrow or anything like that, but after the FOMC meeting, probably this is going to go lower if the Federal Reserve delivers as the market is expecting. So again, we can reach this target. I'm not going to risk my money on it, but purely based on technicals, it's very possible. Otherwise, just wait for a break to the downside, a retracement, and then take it lower. And that's what I would do personally. Previous comments. So basically this week will not be as interesting as next week, I feel like, or am I wrong? Basically it's all about this week, but again, you are right. Next week will be more obvious. There will be a very clear direction. Because of that FOMC decision, people and investors and big banks and institutions will know what the direction will be for the US dollar for the next few weeks. And in that sense, it's much easier, much clearer to know in which direction to trade in comparison to this week. This week will be up and down, up and down, up and down, just consolidating because everybody is waiting on that FOMC decision. So in that sense, yeah, it will be more interesting to see what will happen when the interest rate decision happens, and it will be much easier to trade next week. There will be bigger moves than this week at least until Wednesday evening. So yeah, that's just because of the economy. Yeah, rewatch all the vids, man. That's a good idea. That's never a bad idea. So yeah, looking at the Japanese stock market, not going to do that. This one is a little bit different. So again, we have a nice buy entry right over here, right at that pivot. We broke structure to the upside, but again, it's not the right time to do this. Still, the bigger time frame is still trending down. As long as this high has not been broken, we are still in a downtrend. This was a last impulse. You can see that's a very strong impulse. This is very corrective, so we can still go lower. We don't have bearish divergence yet, but it's very possible that this is probably going to go lower. Unless we have the Federal Reserve saying, oh, we're only going to hike 50 basis points, or we're just going to wait and we're not going to do anything. That will be seen as a very, very positive move by the Federal Reserve. And then we will see more upside for high risk markets. So equities will go up, AOD, NZT CAD will go up, the Mexican peso will go up. So basically these pairs will strengthen, these instruments will strengthen, while safe havens and especially the USD will then weaken and go much lower. But again, that's not the base case. The base case is a 75 basis point hike. Probably the market will see this as more of a stable situation. So not much will happen. And 100 basis points will be seen as a surprise to the upside. And then safe havens will go up much more. And high risk equities market or high risk instruments like the equity markets like Nasdaq 100 will go down in that situation. US 30. Exact same thing. You can see we are in the monthly pivot sell zone right at the top of the zone. We have seen that this is a nice impulsive move straight to that target zone. Very corrective right now in that sell zone. 50 EMA right over here, already crossed right here. So everything is showing us more bearishness. Only the bigger time frame or the smaller time frame is not. Is telling us that we are not ready, probably. Let's see how this is acting. Why is everything loading so slow? That's weird. All right, okay. Oh, there are my pivots. All right, that's good. We can see that there is already bearish divergence on these two tops. Here they were going higher, here they aren't, or they weren't at least. We can see that here they were going higher as well, and here they really created divergence. They were going down here, buying pressure was going down. So this is setting up very nicely for a sell. Of course, how you can trade this, let me delete everything. Let me draw a zone. So this was our role reversal zone. This was our bullish integrity zone. How I would trade this is wait for price. Come on, man. Wait for price to break this and then retest that pivot or retrace to the sell zone, the next sell zone, and then take it down. That's how I would trade that. That 50 EMA will start to roll over as well. So if price breaks that 50 EMA to the downside, it will act as resistance once it's retesting that on the other side. So that's very nice. That's something that we are waiting for, and definitely very, very possible with the current fundamentals that are in play right now, especially the ones from Wednesday. So guys, I'm going to end the call with this. If you don't have any questions further, I'm going to wrap up the call. Thanks for watching. Don't forget to like the stream because it helps me out a lot. Other than that, I'll see you guys in the Discord. If you have any questions, drop them there. I'm happy to help you guys with that. And I really hope that I get my admin account back very soon so I can help you guys even more. So yeah, thanks for joining. You can find the Discord link in the comment section below. So ciao guys, and we'll talk later.